Hey guys, it's Josh with the Construction CFO, and today I wanted to go over what it looks like when you don't have these four things. When you don't have the four numbers that matter, you don't know them for sure. Your revenue, your gross profit, your net profit, and your cash flow. What are the symptoms? What does it look like? What does it feel like? That way you can help identify in your own business maybe what's happening. Um, just between you and me, what I see every day is people tell me I have my reports, I have my profit and loss, I know what my net profit is, my gross profit. Yeah, I do those things. But when we look at them, when my team looks at it, it's actually not the way it could be done or should be done in a way that gives them what they want. And that's why they feel these feelings, even though they think they're getting these. So we're going to dive in. We're going to start with revenue. Again, revenue is how much money is invoiced after retention within a certain amount of time. So if we are missing revenue, the way that normally happens is, say I have a schedule and I have a $1 million project. It's going to go from March till November. I've assumed a lot of businesses, a lot of owners will assume, well, I have that $1 million on the books, so I have $1 million of revenue. But really, you're not collecting retention till the next year, and you're not even invoicing for it till years down the road. So really, you only have $900,000 on the books, and then you get into the project. It pushes a month or two, so now we've lost a little more revenue to next year. And then we have time and material change orders. So we've been doing work, we're spending money, but we're not actually able to invoice for it. So it doesn't show up as revenue, it just shows up as more expenses. So that pushes it a little further out because we still have to do the rest of the work. So really, we might have done $800,000 worth of work during this year, this fiscal year that we're going to be measuring. But really, our revenue is more like $500,000 because we're deferring invoicing and payments. So it's super important to have a tight window on how and when we invoice. But when you don't have those things, like those are how it might happen in the real world for you. You might experience it, but what you're going to feel is completely blind. Like I've seen people, $7 million companies, lose pay applications. They don't know how much they need to collect because it didn't get entered into the system right. Maybe they put an invoice out, they sent it out, and then it got revised or it got rejected, and then they never resent it or did anything with it, and then it just sits there. And people forget to fix it. They forget that, oh, well, instead of 250, I'm supposed to change it to 200,000. So it just sits there and it's wrong. That changes all of your numbers. If you don't know where you're starting in math, if you don't know if you have 1 apple or 10 apples and you're eating a bunch of them, you don't know how many you have left because you didn't know how many you had to start with. So that one's super important. You're not going to have a way to calculate, obviously. Our collections are getting lost. And the last thing is your taxes are going to be wrong. The government, IRS, only care about 2 numbers in your business. How much money did you make and how much money did you keep? Those are the things you're taxed on top of a couple other areas, depending on the taxes, but those are the 2. We're going to move into gross profit then. Gross profit, again, is revenue minus your cost of services, the cost of construction, the cost it takes you to build a project, direct costs. What that means, or what that looks like, is going to be, you have no idea which projects you should be estimating. Which ones are good? Which ones are bad? Did I make money with this GC, or do I typically lose money with them because they're overhead burden heavy, for example? We're not going to be sure if we can negotiate price. We get to bid day and the GC says, hey, we want to use your number, but you're a little high. Can you sharpen your pencil? If you don't know, you have exactly $57,000 of profit in this one area or over the whole project, and you can negotiate that down to maybe $30,000 because that's what you're comfortable. Like, okay, we really need the work, we want to get down. If you don't know that detail, like, good luck. You might be locking in a project with a slow bleed. What I see very often is we have $1 million project, and every month we're losing $10,000 or $20,000, but we don't know it. We have a feeling that something's wrong. we feel like we're overspending on something, but we're not sure why. What really happened is we took a bid that we shouldn't have. We underestimated it, but it's small enough that it's hard to notice when you don't have proper job costing. So that's what you're going to feel like when you have gross profit. Net profit, this one is hard to not know because basically it's your revenue minus all of your expenses for your business, and then you're left with net profit. But again, if your revenue's wrong, your net profit's going to be wrong. We're not going to know how much we made if we didn't know where we started. We're not going to even know if our business is viable. So if you go to sell it, if you go to get a loan, some lending, people are going to ask you, like, how, if you're not making any money, how do I know you're going to pay me back for this $500,000 I'm going to loan you? If you can't prove you have, you make $50,000 per $500,000 of revenue, like, they don't believe that you're going to pay them back. So why would they give you money? It's not like it's not a requirement that somebody can loan you money because the SBA loans are government, and so you just get them. You have to have a purpose, and you have to be able to pay it back. The next thing is we're not going to know what our overhead is. Again, if we don't know our gross profit, the way we get to net profit is revenue minus cost of goods is our building, how much it costs us to build it, minus our overhead, our other expenses, what's in our bandwidth of this business, whatever it takes us, computers, gas that's not job related, airfare, conferences, business development, marketing, whatever, estimating. If we don't know those, it's really hard to know what our estimating is. So if we don't we don't know our overhead, then again, our taxes are going to be wrong because, like I said earlier, the IRS cares about how much came in, how much you kept. And if those two are wrong, your taxes are wrong. I can tell you from personal experience, not mine, but seeing clients, like, I've seen a $70,000 tax bill because somebody did their taxes wrong because they didn't do these two things correctly. So it's super expensive, especially when the IRS slaps you with 30% interest just because they can, and they're not going to negotiate with you. They don't care if you know how to do it. They're just going to take you to the cleaner and make sure you pay them. And then you could be taking too much in owner's draws. I see this a lot where we're really stressed. We're $40,000 in our line of credit. We get a $200,000 check, pay off the line of credit, pay off the vendors. I'm still left with 50 grand. That's awesome. I'm going to take 10,000 because we really need a vacation. Or it's Christmas. I really want to give my family these awesome gifts, right? My daughter wanted a new iPhone, that kind of thing. So you take it out. But then if we're not looking ahead, and this will get into cash flow too, we're taking too much in our owner's draws, and that hurts us when it comes to cash flow. So this is the one everybody feels like. All of these others are kind of like they're like an infection. If you get them, it's going to take a while, but it's going to kill you eventually if you don't take care of them. Cash flow is like having a brick tied around your ankle and you're dropped in the ocean and you have 30 seconds to survive of oxygen. That's how cash flow feels. If you're feeling these kind of things, like you're struggling to make payroll every week, we're not sure if we're going to actually make it, or maybe we barely do, but next week is going to be a struggle. So then we get into, I'm going to skip one for a second, we're going to get into borrowing money from anyone who will give it to us. It doesn't matter if it's in MCA, it doesn't matter if it's our parents, our kids, if we have to rob money out of our piggy bank or our wife's purse or whatever we have to do to make this work, take it out of our personal account to keep the business going. That's a symptom of cash flow, and that's like totally unnecessary. Any business that's viable, any good business should have plenty of cash flow and be surviving. It's just planning it, but we shouldn't be, if we have negative cash flow and negative profit, like there's no reason to even be in business. We're a nonprofit, we're a not for profit, whatever you want to call it. It's not even a business, more like a hobby, expensive hobby. Then you're going to constantly be chasing AP and AR. Instead of just borrowing from everybody, you're going to be calling every GC you have. Can you please pay me a week early? Because my guys are going to quit. I don't have enough money to pay for payroll. I can't pay for this excavator, so I can't show up. I can't, my concrete account's going to default because I'm 60 days behind because you haven't paid me for 60 days. And they don't care. They're just going to shut down every project I have because I owe them money for concrete. That kind of a problem. That's going to be a huge symptom of cash flow. You're going to, I hear this all the time. I hate this one. But saying when we get paid. Like this theoretical, it's going to happen. It's guaranteed. Revenue, have you ever sent an invoice and had somebody reject it? Probably a lot. So what happens, because there's so many variables and moving pieces in there, you send an invoice, it gets recorded in your accounting system. Someone says, hey, we're not going to pay you right now because you tried to bill for mobilization. Hey, they pulled the project. We're not going to do it for another 3 months. Well, if that doesn't get removed out of your system, you are going to be counting on revenue, paying taxes on money you're not getting, thinking you are making profit, when really it's just an accounting error. You weren't going to get it in the first place. So when you get paid, we can't assume everything that's in our accounting system is perfect. We have to vet it. We have to make sure. Sometimes you bill for a T&M and it's more than they want to pay, or a change order and they're going to negotiate you, but they're making you do the work anyway. That kind of crap happens. So we can't say ever when we get paid, because we're not guaranteed anything. We're only guaranteed money in our account. And cash flow, when we don't have money in our account, this is the one that will kill us immediately, stop us dead in our tracks. I've seen $20 million companies, $300 million companies go out of business immediately. I just saw Eddie Bauer today go out of business or file for bankruptcy because cash flow, not because they don't make profit on all of their stuff, but because of cash flow. So super important. If you're missing that part, I'll put a link in the description for our cash flow forecast we use with our clients once a month. It's just our way of doing things, but at the end of the day, it's just looking at it, because if you don't, you're just going to have this nagging anxiety of, can I pay that? What if I want to do this? Can I do this? But you never know, and so you never make a decision. And indecision is so much more expensive than making a decision and then maybe it's a little wrong. So